I never dreamed about success. I worked for it. Estée Lauder. My friends, each and every day, your work 10 to 15 minutes, learning the nuances of the market, practice trading, following these charts, learning how to read them. As far as your financial success in the future, growing that nest egg, being a master of the charts, all of that is, I think, going to depend on whether or not you find the 10 to 15 minutes each and every day. If I, in my schedule for free, can find the time to put this show on each and every day for you, you can sure find the 10 to 15 minutes that we ask you to spend. I spend a lot more than that just putting all this together, running it all down, getting it all done. And we here at Charting Wealth provide it to you for free each and every day. And I do appreciate all the wonderful comments, all the emails and posts and text messages and everything else from everyone, and the Patreon support. Thank you, my friends. The stuff you support tends to stay around. Let's jump into these charts. We are up on everything today but Bitcoin. Stocks are up, bonds are up, gold's up, Bitcoin down. Let's start first with the S&P 500, as we always do. I'm looking at our trade execution summary grids over the past week. We have been at 70% directional probability all week long for continued up movement in the S&P 500, as well as the NASDAQ 100, and 80% backtest accuracy. And for the most part, we have gone up for the week. We had a little bit of a couple of red dojis you can see on the half-day chart at the end of the day yesterday and this morning, but then back up again today. Of course, we have reached a higher high for this week. The high 605.06, last week 683. And again, our exit point has been around the 610.78 mark for many days now as I look back. And again, we're looking for some more up movement. About what? That's $6.25 moving up further. So we shall again continue to watch and see if things are actually going to make it up that high. So got a little ways to go, and of course we'll be here with you tracking that the whole way. And I'm sorry, that's $7 more to go up where things close today. Now, if we look at where we are with the volume, we can see that our volume has a ways to go with just one more day to get to average. I don't think it's going to do that. Half day, not quite halfway up on the volume. Still have one more day to go on that. We look at the last, several days, few days, maybe 3 days there, 2.5, 3 days, we have average volume. So it's looking okay on the half day at least. Something to be desired on the 2-day and the weekly. But again, we'll see. May have a big booming day tomorrow, up 0.40%. So we're staying at a 70% directional probability for continued up movement, 80% backtest accuracy. As we go to the NASDAQ 100, we can repeat those statistics for directional probability at 70%, backtest accuracy at 80, up 0.23% for the day. And of course, we're getting right up there to that prior high that we saw back in January and mid-February. Then things tumbled down and then stabilized and moved up, and things continue to move in the right direction, higher high this week, and things are looking good. So we're continuing to stay long in stocks. Now, I tell you, exogenous events can always occur. You need to be paying attention to these trades if you are in these practice trades. And again, we say practice trade because it's not a stock calling service, not a Bitcoin, gold, or bond calling service. We're an education firm. I want you to practice with us, learn by doing the best way possible. Now, as you start getting good, in fact, I'll put this at the end of today's video. I like everyone to see it. Fractional trading. What is fractional trading all about? That is where when you think you're getting good, you're tired of paper trading, you want to get some real money into the market, then you know what? Start with $100. Get a $100 fractional share if your broker allows you to do that. Or, of course, if you're dealing with something less like bonds, heck, you can get one share at $87.17. And you can practice trade that. Now, of course, not that you would right now. We've been in a downtrend, but that may be ending because that's what we're coming to next. But you can put as little as $100 in. That's easy to track when you're dealing with something like an ETF that we track here every day, and you can see how well you do. Do you make 2%? Do you lose 4%? What do? You learn how to enter those trades. You learn how to put in, how to figure out just between bid and ask, how to enter a trade, how to make a good till canceled sell order, all that kind of stuff. Now, let's keep moving. We're going to go to 20-year U.S. government bonds. Where are we there? Well, my friends, I was lamenting yesterday. I kept telling you, I keep seeing a potential bottom here, and I keep waiting for a reversal. We've had 2 dead weeks here with dojis. We had all this volume in the latest down move, the interim low, and we've had things slowly maybe turning around. Today gives me hope. Bonds up 1.20%. We don't have the volume matching it yet. If tomorrow's another up day and we can get some more volume here and get it up to average volume, I'd feel good about a potential turnaround. Doesn't necessarily mean that's going to happen, particularly if you don't have the volume on the bottom and the volume on the turnaround. See, we didn't have that happen back on the 21st and the 28th of April, the weeks beginning those 2 days. We didn't even have an interim low. We had the interim low way back on that first week of a down move. That doesn't set up right. Where we are here now on this move, again, akin to the move we saw starting back in December, moving down and bottoming with average volume on the week beginning 13th of January. Then the rotation over, it started slow. I would like to have had average volume, felt better about it. It did hit average volume the next week and then sort of took off and moved up until things pinched over in late March. But again, had a nice ability to capture right in here, one-time ATR, and then to let the rest of that profit ride. If you don't know what I'm talking about how we use average true range, then you've not taken that training. In fact, I'm going to put the average true range training on how to use it to help you lock in profits, minimize losses, get yourself out of bad trades, and then let profits run. I'm going to put that in the email today that goes out to all the subscribers for free at chartingwealth.com. If you're not a subscriber, you're not getting those daily trainings, and you need them. And the way you can do that is just go sign up for free. That list is never spam, never shared, and we don't charge anything for it. So I am predicting that if we have decent volume tomorrow, we can get up the average line and things continue to be a green spinning top. We may have a rotation over here. Now, I'll tell you that as far as the math goes, as to where our trade execution summary grid, it tells you that we are still 85% bearish with an 83% backtest accuracy. I'm saying that may not be the case. Just because the math says it doesn't mean that's what's going to occur. I could be all wrong. Things could just crash in bonds tomorrow. That'd be fine. We would say, okay, Tom was wrong. The figures bear things out. But I'm just waiting. No reason to pull into anything today. We don't have the volume there. But it sure looks to me like it could be a turnaround after these 2 dead weeks. It's what I call them, when things don't just take off. Sometimes you'll have 1 or 2 dead weeks before the market gins up to roll either up or down, and in this case, up. So we'll see. That's where we are on bonds. What about gold? Gold, we're 65% bullish, 67% backtest accuracy. Gold jammed up again today, up 1.24%. And of course, that prior high happened back on the week beginning 21st of April. Got a ways to go before we get up to that, but we are moving up what? The trend line. We're staying above it on the 2-day, sliding along it, but staying above it on the half-day, and gold punching up again. It's been hard to see. The numbers on our charts have been telling us that it's just continuing to push along slowly. Not much more than a coin flip at 65% and a 67% backtest accuracy, but gold just keeps moving in the right direction. And lastly, we'll take a look at Bitcoin. It is even less bullish, 60%. And again, that's nothing that I want to trade on. 60% backtest accuracy, 60% directional probability over the next 5 days. But again, as we look at Bitcoin, it was down for the day 1.82%. And I will tell you that as we look at it, we continue to see, again, difficulty there as Bitcoin struggles along, but continuing to move up. We had last week a week that pulled over after, of course, that historic high back on the week beginning 19th of May, then slowed down the week after that beginning 26th of May, then last week beginning the 2nd of June. It turned into a red spinning top, almost a doji, and then this week trying to move back up. And then, of course, on Wednesday afternoon, it started to peter out. Thursday down. So again, still above, though, the weekly trend line on the 2-day and the half-day, and of course, still on the weekly. So we'll continue to let Bitcoin march along, waiting to see, again, if we can get any stronger bullish sentiment with a good backtest accuracy. That is where we are, my friends, as we end the day on Thursday. Don't forget, Patreon members, we'll be sending you your weekly vertical crossovers in the next few minutes. And we just appreciate all of you being with us. Always love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth.